Hello and welcome everyone. This is going to be a CLOV trade breakdown from this morning. So a little context here is during the pre-market, we had pretty much accumulation throughout the pre-market. And then upon open, we had aspirants all the way up. As you see, that parabolic push, we had aspirants 17, 1750, 18, and 1850. Pretty much the whole way up. And then we got a pullback. And now we're sitting within consolidation. We're setting up ourselves for a new trade here, right? So we're just going to be analyzing the prints as they come in, and we're going to set up a game plan based upon those prints. We're going to set up a price target, possible entry, and then a stop loss as well. So we have two print lines here. Main one here is 1770 is where we're consolidating within. So now we're going to keep in mind all the buying from this morning. It gave us a large pullback. Now we have significant ask at 18. Those were huge ask at 18. And keep in mind as well, so after that initial pullback, we did get more ask 18. So this is a second time printing at 18. These were significantly larger than the first time that printed at 18. So, I mean, we have aspirants at 18 about 3 times now. So clearly they are accumulated, and they're making it very clear that market maker wants as much as they can get at 18, right? So now it's just a matter of us setting up and finding a trade. Since they already did pull back, I'm not expecting a pullback as significant. Maybe we get a pullback here for 50 cents because it's within a consolidation. That's perfectly fine. But I'm not expecting a complete pullback to, say, 1650, right? Context here is this is a hot stock. It gapped up in the morning. We have 130 million shares traded so far. So all eyes are on this. So now we're just looking for the proper information to make a trade, right? So as we're looking at this within a consolidation, we know we can't guess here, right? We can't just enter a trade within a consolidation. That's just asking to be shaken out, right? We have to be able to calculate our entry, right? So 1750 on the ask there. So we got those aspirants at 18 to pull back 50 cents, right? It gave us our pullback. We're still within this consolidation area. It's a larger consolidation, yes. So that's to be expected. So our increments are 50 cents. So in the current moment is trading in 50-cent increments. So prints that are at print personality should give us about a 50-cent pullback. But have to keep in mind that this is also a beast of its own. This is going to be an exception type of trade, just given the sheer amount of volume, right? So we have to keep it in mind. This could possibly be an exception trade, and what that means is it's not going to follow the rules to the T. So this is a little higher of a level trader to really get a real grasp of this. If you're a new trader, these aren't the stocks you really want to start off because, I mean, it has a 50-cent swing for a pullback instantly. 50-cent bar is just, if you don't know what you're doing, it can eat you up quickly, right? So now we're still within this consolidation here. No entry has been present. We got a 50-cent pullback, and that's quite frankly enough. And we had accumulation within this whole consolidation within this print line. 18 asked a few times now. It sure has. The market maker has told us that this has enough buying for 20. We just need the proper volume and proper release, right? Just waiting for some new information. 18 tells us a price target of at least 20. We just need information when they're done building. And in the current moment, they're building. Volume is phenomenal. We're trading on average 2 million. Highest peaks already was about 6 million. So. And we're also entering a volume pattern here, right? We have a consolidation, and then if you look at the volume, we're kind of waning. So we're entering a dip. Most of the time that more ask at 18, so this is about 4 times. So it's obvious that this market maker has the intentions for 20. Now it's just a matter of if are they going to drop this and just hammer it down to 16 to build, or can they accumulate as much as they need within this consolidation? And we're going to just wait for a trigger for confirmation of that. And in my opinion, for them to acquire that much at 18 multiple times, 1750. That's really just disregarding, not necessarily disregarding, but it doesn't hold as much weight as that 18 asked multiple times. So like I said, market maker already told us 20 is price target. It's just a matter of, okay, let's set up our game plan and win. Is he going to drop it here and we're going to go back to break the second print line under the 1664 print line and continue to build and maybe possibly a gap fill under? Or are we going to trigger and this thing's going to run an exception? Two options, right, out of this building. Now we just need to figure out which one. And right now, my percentages are leaning to the exception side just for the sheer amount of volume. I think a big indication and key here is, okay, they need to build, but they are currently building. With this amount of volume, shares in the millions, they can accomplish their plan a lot quicker, right? Of acquiring shares as much as they need for this move to 20. It's evident that the move is occurring in 20. Now it's just finding the time frame, and we look at our volume and how significant that is. They can gather as much as they need as quickly as possible. So the likelihood of a larger pullback here, it's not there. I mean, it's possible, right? Anything could happen within this consolidation, but I'm leaning towards a breakout to 20 just from the sheer amount of buying they showed at 18 and how much they've bought within this consolidation area, and how much they bought during the pre-market as well. So leaning towards a breakout to turn into an exception, but understanding that that pullback can be just as likely. So we're setting up in a volume dip. We have this volume dip and this consolidation. I believe I called this out within this morning in our chat room as well. I said CLOV is setting up for a bar here, and how you recognize that is just the price action is getting smaller and smaller, and then the volume is continuously dipping, and that's not going to last for long, especially in something like this with this much volume. It's going to pop and it's going to have a trigger. So we're expecting a trigger here. I think a big key indication that we need to look for is off-level buying. We know 18 is just massive, price targeted 20, but now we need to set up our trade, right? We're looking for off-level buying that says now, okay, the market maker is going to make their money now, and those off-level positions that step in are ballsy positions that say, I'm going to follow that market maker, or I am that market maker, and we're pushing this to 20 now, right? And if that doesn't come in and we get a flood of selling, then I transition my thought process into, okay, they didn't acquire enough shares within this consolidation, so it's going to be a lot longer of a trade in terms of a pullback, and then after they pull it back, there's the amount that they need, then we'll be looking for that long. But so just within the consolidation again, we had more ask at 18. I mean, that's just about a fifth time printing 18 ask with this much volume. It's just, if you were gonna build, why not print at 18 here, maybe once, twice max, and then just trigger it under already, bring it back to 16 if you need to build that much on your position. But it's still in this consolidation, it's still hanging around this print line. I really like those 1790 prints there. Those are shorter term, and 18 and it leaked above a little bit. 1810, really like that. And again, guys, 20 is a very conservative price target here, so we have the ability to wait for a proper trigger and proper follow through. So no need to jump the gun here because we know we're gonna have plenty of room on this push. So just like that. Still building, right? They're still building. They trapped a ton of retail there. With trades like this where you have a ton of room, I'm not really concerned about that selling anyway. I know who I'm following at 18, and I am confident in the fact that they need to make money for the sheer amount that they printed at 18. But coming back to the previous thought of not jumping the gun, just understanding how much room there is for the market maker, for them to print that much at 18, $2 trade for them is really conservative. I'm even thinking 22.50 is a real price target for how much their position is. But no need to jump the gun when we have that much room. Allow the confirmation to come through. Allow the volume to wax within itself. Personally, I did not jump the gun there. I really wanted some confirmation within the bar. I was very close to taking an entry within that bar, but did not. And it's still building. That volume just did not sustain itself, did not wax out of it. A real trade out of this consolidation is going to wax, right? I mean, and that buying, and then we had more ask at 18 on that push as well, so which tells us a possible pullback can occur. And how many times is printed at 18 and pulled back? I really want to see this get away from 18 a little bit before I take a trade. It's already, this personality has already told us print 18 pullback, print 18 pullback, print 18 pullback, print 18 pullback, and it stayed within it's a dollar range. I mean, that's how you know the stock's going to move, when the consolidation is within a dollar range. So understanding its personality, and it's just building, not going to get trapped when they're building. I mean, that's really, when it comes down to it, a market maker to build is to steal our shares, retail traders' shares, right? And still not concerned about this 1760 buying, really. I want a proper breakout of this consolidation, and then I will reevaluate the prints that come in. I'm sticking to my game plan of these 18 aspirants need to make at least $2, and then also I'll reevaluate my game plan at 20, given the new information, or we get a larger pullback. So I know what it needs to look like for an exception breakout here, and it's going to need to be consistent waxing volume to a breakout to 19 and then to 20, right? Take it $1 at a time. So I never took an entry here. I'm still just stalking the money flow. So once we figure out and find a trigger, then we'll set our stop loss. So 1750 bids there. Still not concerning. Really not concerning. That 11750, burst on the bid there is probably one of the 18 asks that showed up. And we've gotten like 5 or 6, maybe even 7 times on the ask at 18. So we're still in this consolidation here. We don't have short shares, so thinking of a short trade and planning out a short trade is not within our ability here. It's really long or no trade. So still in this consolidation. Let's just break down a game plan again. It might be repetitive and might repeat myself in terms of setting up a game plan, but that's how it is when I trade. I sit there and I repeat game plan over and over and over again, because every single time I create a game plan, things can change as well. So I'll create a game plan, and then if variables change, then I'll change my game plan. It's not just a black and white game plan. It's 18 told me 20. Now it's me finding the variables to see, is he saying he's going to pull it back to 16, or is he going to stay within this consolidation and then give us a proper trigger and we're going to 20? So it's finding the variables to understand which possibility, which one the market maker is telling us. Is he telling us he's going to make money on his position, or he needs to build on his large position, which would be a pullback? So in my mind, I'm just constantly running through, okay, both possibilities. Which one has the higher percentage, build or money time, build or money time? And I like the buying that has come in this consolidation that's under 18 and above 18, and I love the buying at 18, and they're still using this consolidation to build with great volume over 1 million. A proper trigger to the upside, I'm looking price target 20. If not, we let it pull back, and then we reevaluate for another long trade. So we just play the patient game. And again, consolidation, volume dip, bars are getting a lot tighter. Expecting a volume, some 99. I really like those 17.99 and a lot less ask here than previously. So those 17.99 are short-term ask prints that tell us money time is going to come soon. Why would you print 17.99 like that if you had the intentions to pull back to 16.50 to build larger? So that's a great confirmation. That's short-term buying. That says a trigger could possibly come here. Some more ask at 18 with leaked above 18.10. I mean, it's just ridiculous how much ask prints can't come into 18. I mean, the money flow and how much they've bought here is insane. So let's see here. Again, we know our price target is going to be 20, so we have some room here. No need to jump the gun. No need to get into something that we're going to get shaken out immediately. In all reality, I would like to see this break 18.50, and then we can look for a trade. Or at least under here, 18.50. If the volume starts to wax. So pay attention to volume here. Our tape speed is increasing. We're speeding up here. We're coming out of that dip. See, like, taking a trade within this area here, it's a little risky because just knowing its personality has printed 18 and then said build and then pulled back multiple times. So I really want that confirmation above 18.50. And then we take the long. Just knowing how much room this is. Okay, boom, 18.50 ask. Volume is starting to wax a bit. Huge ask at 18.50 again. So I ended up taking a shot above 18.50 here. I gave myself I like the consistent volume, right? I like it's not one huge volume bar at 5 million. That's not inconsistent. I like the consistency here. It's waxing. So we had 2-point-something million, and now we're approaching 3 million. And let's see if we can continue here with waxing volume. We have all the buying in the world to get to 20. So we just need the price action and volume towards the upside. So I ended up taking a trade of slightly above 18.50. Stop loss was going to be about 30 to 40 cents. Because the risk to reward ratio here, I'll risk 30 to 40 cents to make $2 any day of the week. So we're in this trade. Our volume is waxing here. Some nice buying that's coming in. I do have in the back of my mind the 18.50 ask, but in reality, this should just turn into an exception and run here. Volume is waxing. It's consistent. Really smooth right here. This is our money time right here. This is where they're making money on their 18 position right here. Consistent, smooth bars, waxing volume. Now we're coming in at 19. 19 ask huge again. It's just unbelievable how much buying this is. So here, double top, always a good spot for market makers to steal retail shares. Gonna expect maybe possibly a little pullback here, so gonna play that as that in the back of my mind. If not, even better. But again, see that volume, the difference between that false trigger and then this real money time breakout. Consistently waxing bars compared to one huge bar that ends up shaking retail. So the difference between a good trigger and a good entry versus a false one. We gave it the room. We knew that it has plenty of room for a breakout to the upside. From what 18 told us, the market maker told us at 18. We knew that the personality around 18 was mad shakes, so we wanted to stay away from that. We found the right volume in terms of waxing, consistency, consistent bars. We took a trade above 18.50. We do have aspirants at 19, so we have to be really mindful. It's a tough situation here because from per rules, 1850 and 19 need a pullback, but you have to understand that this is money time now. How much is enough for them to stop building, right? Like, they built in that whole consolidation. They should, if the market makers want to make money on their position, it's not $1. They need to really wax this and get this going. Could it pull back? Yes. I'm ready for that, but I'm also understanding that 19 is not our price target. 19 is not what the market maker's intentions are. Just have the back of my head that 1850 and 19 could possibly pull back, so we could possibly get a bar down. So I have my order ready to get out if need be. But really, I know that this really should go to 20, very conservative, and possibly a push above. So we knew our risk to reward, 30, 40 cents, waited for the proper breakout, not a false trigger, have our price target, and we manage on the way up. We know there's aspirants at the levels, but we know this should be their money time because they spent a good portion of their morning accumulating within that consolidation. What's the point of breaking out and then having another $1 pullback, right? It's really just not counterintuitive to their game plan of making money on their position as quickly as possible. So now we're pretty much up $1 at this point, if not more. Price target being 20, we're pushing. Prints don't lie, not at all. When you know who you're following, and you know how much they need to make conservatively, and you know what a trade needs to look like in terms of volume and a breakout, and then you set your risk to reward ratio, and then you let the trade play out, and then you manage it within its printing at levels in terms of, are they going to build here or not? It really should push. Is it really money time? It is money time because they spent so much time in that consolidation building. And now we really have the ability to continue to wax here. So 20 should be an easy push here. But then we get to 20. We know 20 is a psychological level. So unfortunately, once we get aspirants at 20, if it doesn't continue, just push and wax right through, we're going to have to take some of our position off, unfortunately, just because knowing it's a psychological level and knowing it's going to print a ton of aspirants there. And we know that it's already become an exception in the manner of it's not pulled back from 1850, 19, and now 1950. So three levels now without a proper pullback. The more levels we get out with a proper pullback, usually the larger the pullbacks are going to be. And we know psychological levels are our best areas for pullbacks, for trades to come back to a reality, for a short trade, for a number one short trade, right? We have all these numbered, right? So we're in money time, and now it's an exception mode. We already did our whole game plan. We found our trigger, and now we're in it. So now we're just managing. So the difference between a great trader and a good trader within this methodology that Rich teaches is understanding the possibilities and understanding what money time needs to look like. Because if you just saw all those ask at 18, from what Rich teaches and from the rules say, it needs to pull back, right? But you have to be able to understand, okay, is this going to be an exception? They're requiring so much at 18. What's this off-level buying that's shorter term telling me as well? Eventually, does it need to pull back? It absolutely does. But right now, they acquired so much of their position, they're going to make money on it now. So you have to ask yourself these questions when you're setting up your game plan. Game plan, game plan, game plan. And it's okay to adjust your game plan as well as variables change. Because one variable could come in and tell you that the trade that you planned is not statistically high percentage. Coming to 20 here, expecting huge ask at 20 just from how much we saw at 18 and all the levels up. And as you see, we've got a smooth trade up really from 18. So it's almost setting up for a perfect time to steal some retail shares. Gonna expect that. But I'm almost positive that those positions at 18, that market maker at 18 is just, they're not going to be satisfied with $2 for how much buying they showed. You don't buy that much for $2. It doesn't work like that. And that, I guess, comes with screen time and taking classes, just understanding how much buying means at level, how much the stock should move. But every single time we got aspirants at 18, it was above print personality, just significantly. We ended up getting really significant aspirant at 20. I wasn't paying attention to the tape as I was speaking, but just know that the tape already passed with great ask, way above print personality, right? Or it's coming up here. But as you can tell, I had this, when we get aspirants like that, our number one short trade being extended, even if it is money time, have to limit our exposure on our position, our long position, because we could get $1 pullback here, and we don't want to subject our long position to $1 pullback, right? We want to lock in that profit. So locked in that profit, I would maybe have 30% left here, unfortunately. See, just like that, boom. And then we just don't want to give that up. And if this thing's going to run to 22.50, we're going to get another entry, that's for sure. So, and I mean, just looking how this thing pushed out of that consolidation without a single pullback, it's just have to anticipate that. We're not reacting, we're anticipating. So yeah, I mean, you're in small runner of your position left, 30%. If it's 1,000 shares, you have 300 shares left. You pick your stop out point. And we didn't really see too much selling as well, though, so as a reaction 20. So there's more 20 there. That's definitely on the ask. And our reaction is definitely not, I don't see the market maker selling a ton of their position at all. So how much the market maker has at 18? Did I see them selling a ton of their position? No. They maybe scratched the surface on selling their position there. And we got just a 50-cent pullback from that 20. And now we're continuing to push. I pull it down in a second, so we will see that above 20. So when we have money time, it really is exception time. Because when we think about what an exception is we get aspirants at a level and it doesn't pull back, right? That's an exception. It becomes an exception. So whenever a stock enters and transition into money time, they're making their money in their position, the market maker wants it to be an exception. They want to push it. They want to allow all retail in to continue to push it as well. So it becomes an exception, and within that exception, retail does get trapped. So, I mean, if you just look at this push from 18, all retail wants to be in this. They think this is going to continuously higher, right? So market makers are pushing, they're making their money, and retail is also being allowed to make money. For how long? Really depends on when the market maker wants to pull the plug on it, stop being an exception on the push. But understand that money time is exception time, but exceptions always do come back to a reality. And we have to understand our psychological levels, like 20, are a great place for a stock to come back to reality. But this is also an insane exception. This is another beast. How much buying? I mean, trading on average in the millions per minute. So we're just letting it play out here. Still have some of your position left. 2010, some off level above. I mean, locking in about 70% on $2. I mean, it's phenomenal trade. And then the rest of this push up is going to be just bonus money. It's just exception time money time for the market maker. I do pull it up here in a second, so just bear with me on that part. But the way I talk within these videos is how I talk to myself every single day within a trade. It's just constant, non-stop talking to myself, and it's all game plan focused. It's what is the market maker's intentions? Are they building or are they not building? Do they need to build? Do they not need to build? What are the other variables? Is it a hot stock? What's his personality look like? Is his personality at this level continuously building? Is it a consolidation here? How's the volume? How's the volume patterns? Are we dipping here? Are we entering a volume breakout? All these questions I'm continuously running through my mind, and it's all part of the overall game plan. And I would advise you guys to also do the same. 1980 ask on the pullback. That's interesting. That catches my eye. Still in 30% here. And it's just kind of consolidating at this 20 level. A firm break below 1950, I'm out the rest of my 30% of my position. But boom, look at that short-term buying above as well, that 2010. We've had 2010 a few times. It still has a possibility to continue to run through 20 just for how much buying. Like I said, $2 price target was super conservative. Really, they should make more on their position. I'm even thinking 22.50, if not above. It has all the variables it needs to run and break through 20. It really does. Volume is consistently great. The 2 millions, 2.6 million on average right now. Just waiting for confirmation of if we're getting out the rest of our shares or this is going to continue to push. I apologize if I've been slightly ahead within the prints. There may be a 10-second difference between the screen I'm watching and then the recording on my platform. So I apologize if it's like a 10-second delay. I just realized that. But nonetheless, the lesson is still there. Still just in the consolidation area. I mean, the buying above 20 is, that buying that comes in above 20 is pretty ballsy. And it's happened a few times, and then we're entering a volume dip as well. So keep in mind for another possible breakout here. So just waiting for a confirmation of if we're getting continuation here or we're getting that pullback from our psychological level to level 20. It's a longer video, guys. It's probably one of the longer trade breakdowns I've done, so bear with me. Again, I am trading this on a separate screen, so it's always I have to come back and be attentive to this one and make sure the chart's all set up. So apologize for this little delay of moving it, but here, there we go. See, and then we ended up getting that continuation above. Exception time. The person at 18 told us exactly what was going to happen. And here I'm in 30% of my position left, and I'm letting it just ride out. Could have you added above 20? Possibly, but my level of trader is just not there. For the variables just said a possible pullback was coming. So taking that trigger long, adding above that, it's a lot more high level, in my opinion. That's why we leave a runner, though, to capture the rest of this push on this move. So 30%, we're on this huge ask at 22 on this push here. A phenomenal push. Again, that person at 18 told us 20 was conservative, and we got way more ask at 20. And the only thing we were looking at 20 is, okay, is this going to come back to reality here, or is it going to continue to be an exception? Are we going to continue to be in exception mode? And again, exception mode is money time for the market maker, and exactly what's happening right now is exception mode. So we leave our runner here, and then we just pick our spots. So my spot to get out is going to be 22. I'll get out the rest of my position if it breaks 22. Probably if it continues to be parabolic here, I'll probably start scaling out more as well. Probably scale out another 10% above 23. Just knowing that this exception mode is not going to last. Look at the volume. That volume is 5 million. That's not going to be able to sustain itself at all whatsoever. Scaling some out above 23. Just going to be scaling on this move up because I don't want to capture it on one large bar for the rest of my 30% of my position. I'd rather scale up on this being parabolic, knowing that this is not likely going to sustain. Likely this is becoming to the end of their money time. I said 22.50 was like a real price target for this position, and now we're above that. So getting a little extended here, and we know retail is just all in this right now. And we know that market makers let retail enter a stock when it's in exception mode, but also when this is going to have its bar down, retail is the ones that are going to be, they're taking a loss on that position, right? So he's going to bar down, and market maker is going to sell. So extended here, I mean, multiple levels, pretty much from 19 to 20 here 4 without a proper pullback. I mean, just this is setting up for a bar down. Multiple levels without a proper pullback. We are in exception mode. Now I'm just analyzing when this stock is going to come back to reality, because it's not going to sustain itself with that much volume. It's not a matter of if it can, it's just a matter of how long it's going to sustain here. 20 level without a proper pullback, it's already a huge psychological level. And now pushing in 25, another psychological level. And look at all these prints that are coming, these sell prints. That market maker is doing that with intention, right? So we see all those sales, those bids, prints get triggered off when the halt's going to come, but they didn't halt. That was very intentional. The market makers in this are phenomenal. They know what they're doing to a T. They're using that selling like it's going to halt on purpose to get scale out of their position. So twice we saw possible halts like that where it comes in just flood of huge selling. So now we know. This is another time. Look, another one. I am scaling out the rest of my position here. I probably have 10% left. So now we're coming into 25, another psychological level. I'm getting out of the rest of my position if it breaks 24. I mean, 2-3 times of looking like it's going to halt with that much selling. You just know this push is not going to last, as well as unsustainable volume. And now you can see volume is slowing down as well. It's struggling to get back to 5 million. Boom, I'm out the rest. 24 huge selling. Now they're getting out of their position, right? They're making money on their position. They made over $5 on their position from the 18. Now it's just, let's get out of our position towards the later half of their game plan, and now it's more of getting out of their position. But we analyzed every aspect of this trade, and it was a phenomenal trade. We're already out, and this stock is pulling back, taking retail, shaking retail. It's unfortunate, but it's the way the game goes. You have to know who you're following and how much they need to make, and once they're already making their money and they show that they're already selling their position off, I mean, it's a sign that you should be as well, right? Whatever they do, we want to follow. So if they're taking huge parts of their position off after being an exception for an extended period of time, it's setting up for huge bar down. So that's pretty much the end of this evaluation of CLOV. This pullback is going to be, if anything, back to 20. It really should be back to 20. So enjoy the rest of this video, and thanks for watching. If you made it this far, appreciate your support, and have a good one.